Hi, this is Mark with your analysis for the week commencing the 19th of October. If you were trading last week, it was a very difficult time, extremely volatile and rather scary at times. And as a result of which, I have included a post below this one from Judith Waker from Fortress Trading Academy. And Judith is attempting to explain what the heck went on and what is likely to happen this week. However, having said all that, and despite all the chaos, if, like me, you trade off daily charts, then you can flick through the various pairs and see how often price stopped at major support and resistance. And had you been trading daily charts, the spikes wouldn't have affected you. And a couple of weeks ago, in my previous video and post, I showed you when price was down here with the euro, I said I'm not going to go short here because it's been an extreme move. I would look for a pullback to 12800. Now this did spike up to 78.6 where you should have had your stop had you taken it at 12800. But if you'd waited for the daily candle to close, it closed below the EMA. It was lots of reasons why you could have taken it there, even more reasons why you could have got in here, and therefore that was a safer way to trade. And as I say, if you have a flick through, you'll be able to see this is the pound CAD. I've been showing you in recent weeks how it keeps bouncing down off 81.50 area. The euro pound stopped at 80. The Aussie dollar again bounced back up off this major support and resistance. And there's lots and lots of other examples, this being the CAD. Yes, it spiked through, and if you were following it on an intraday move, it was a bit hairy, but where's it stopped? To the pip at the double top. So support and resistance in all trading is key. However, on smaller time frames, price will shoot through. Occasionally it will do it on the longer time frames. But if you use the longer time frames, you are less likely to get a situation whereby you get in, you lose, and then it turns around and goes hundreds of pips the way you calculated. Also, of course, means you only need to trade at the end of the day and analyse for maybe quarter of an hour, 20 minutes a day, and then take the trade. On to this week's analysis. This is that Euro USD. Now, 2 weeks ago, I said to you, price was at an extreme low, and if I was going to take this, I would either wait for a clear break below the trend line, and I think I spoke about 12400, but what I was saying is I preferred a pullback. And I showed you on loads of pairs that we were at extremes. Go back and check the blog post, I think it was the 4th of October. I explained why I was not going to jump in now, and it's very tempting. You've seen the euro dropping, you know it's going to keep dropping. It's tempting just to get in anyway. Had you done so, it would have whipped back and taken you out. So what do you do now? Well, the caveat is, as explained earlier, this is chaotic at the moment. This is very difficult. The safest way to do this is trade from daily. If it pulled up to 130, yes, I would definitely short this. I believe this is on its way to 120, either later this year or early next year. So for me, I want to get in and I want to stay in, and 130 would be the best area for me. This is the dollar Swissy, similar scenario with the dollar Swissy. When I spoke to you last couple of weeks ago, the price was up here. There was no way I was going to touch it. I wanted a pullback. I was thinking in terms of 9,500, but it went straight through that. Again, the daily candle closed here at 9,400. This is the area, I suppose, really, 50, but it's a bit wishy-washy again, guys. And then you've got this major monthly 55 just above it. I would tend to leave this one alone at the moment. The British pound, we've had 3 straight months of falling. We were looking as though it was carrying on. Once again, this pulled back. The pound on the weekly. Now, this is an interesting scenario. There was a lot of negative news out of the UK last week, and it makes you wonder what the heck Carney was ever thinking about 2 months ago when he started speaking about interest rates going up quicker than expected, because that's turned out to be an absolute lot of doggy-doo. Now, the pound, lots of negative news. The one positive last week was that unemployment fell below 2 million for the first time in 5 or 6 years, but that pin bar reversal candle suggests a move back up. Personally, I'm not buying it. I'm not buying the pound, and I'm more interested for shorts. And it's a case as ever, where do you get in? Well, the main area for me is anywhere around 162.50 this week. It's that monthly 55, there's the 200 down here. So really, this is the zone. This is where I will be looking on a daily candle close for a potential short. Because apart from anything else, we've got a major trend line in place here as well that goes back to earlier in the year. So technically it looks as though it's going to bounce up, and I could be wrong. It could be set off and a run back up, but all the fundamental news that's been coming out other than that unemployment has not been positive for the pound, and therefore I will leave it. And if you look here, again, this is on a daily. I've fibbed a daily. This is that zone I've just been talking about in between these bigger long-term EMAs. Also happens to be an intraday fib, important fib area as well. So for me, only a short on the pound. The pound CAD. And I was surprised with this last week because once again, fundamentally, the pound is doing worse than the Canadian dollar. Yes, Canadian news has been mixed, but I have been shorting this in recent months and it has been doing very well. So I'm tempted, I'm going to short it again. I'm going to wait for the market open, and as long as it doesn't gap upwards, then I will be looking for a short. Even if it does gap upwards, I will be looking for potential reasons, but the gap method is a completely different one, and you need to look in the education area if you want to trade gaps. Don't be doing it at the moment if you're new, because you could lose your shirt on this. But I am very interested on that. If it was to break and close above this area, I would even be waiting on a weekly chart before getting long on this pair. This is the euro pound, and again, when price was down here a few weeks ago, I said to you 80 was the area. Now I messed up here on this demo account. I forgot to place the order and I got in far too late. But what I showed you was 80 was the area. We were hoping when it was all the way down here, and I explained to you that the euro pound, more than many pairs, tends to make a break, then a pullback, and then back down again, and we get this staircase effect on the euro pound. And it did it. Now, had you been trading it intraday, this could have got a little bit scary, but however, had you traded it on a daily, wait for the daily candle to close, that was the area. That was the place to get in from a pre-planned move going back 2 weeks. Again, if it pulls back up to that area and you're not in it as yet, consider shorting there. Aussie dollar still bouncing around off this bottom trend line, support and resistance area. Counter trend traders, swing traders will be looking for longs at this point. Again, it's too risky for me. The Aussie dollar, there was talk the other day, in fact Fotis from our Forex Pro Traders course was talking the other day, and from the parity index, the Aussie dollar is 30% overvalued against the US dollar, and the Australian Royal Bank of Australia said earlier this year that they intend or want their currency to be down at 85. This could be on for a big drop, guys, and the way to play it will be either wait for a pullback, and 90 is the main area for me, or you wait for a clear break and close below the recent lows, minimum on a daily candle. Maximum, the better one would be to wait for a weekly. But if you look at this, this was never in a million years Bollinger Band setup that was setting up here. You've got we're in a clear downtrend. We've had a big move. Price has stabilized at the double bottom area. If it was to pull up here, 89.32 on a daily and a reversal, I would be interested. But here's the key. This is the king for me on this one. It's 78.6. It's a 55 EMA. We're in a downtrend. Everything's rolled over. At 90, I would go in, and I would probably go in a little harder than normal. Aussie dollar yen. Aussie dollar yen. Fotis also mentioned about the yens and being very careful. When markets are as chaotic as they were last week, the yens can move in a heartbeat in the opposite direction. I would tend to leave it alone. Similarly, this is the dollar yen. Now the dollar yen the other week I'd said to you when price was up here, not for me, leaving it alone, would be interested at 105. And if you look across here, this was the reasoning behind it. That it was a major support and resistance area. Now, we're looking at a potential 5-8 cross, stochastics rolling down. We already had MACD, we could be on for a bigger pullback. I will be more tempted this week. If it pulls back anywhere around 101, 101.30, then yes, I might get involved in this one. But in general, be very, very careful with the yens when the markets are in meltdown and it's chaotic. The CAD, the USD CAD, it keeps trying to break this area. If it breaks and closes above that area, and once again, the easier way would be to wait for a weekly, but if it does it on a daily, then you start thinking in terms of a further long. As ever, the ideal for this would be a pullback. And the pullback, and again, we're talking areas at the moment, it can't be any more specific, guys, but anywhere around 107, that kind of area, because we've got fibs, we've got EMAs, we're in a clear uptrend, and the dollar is doing better than the CAD at the moment. but I'm not taking its current position because of the fact it's too near the double top. Euro yen, another one last week. We are in a clear down channel. What did it do? Well, it spiked almost to the pip, to the bottom trend line. Fingers in the fire, set off back up again. Pin bar reversal candle. But as I just said with the yens, more than any, you have to be mega careful at the moment. And the danger for me with this one, you'd need to stop way down here. So it's not a particularly good risk. But it does look as though we're on for a run back up the channel. So swing traders again will be looking for moves back down from there. That's it for this week. Be very, very careful. Let's see if things calm down for the next day or two before getting involved. If you are going to get involved on a trade, one at a time until your stops are to entry. And if you're new, do it on a demo, guys, because these are dangerous, dangerous markets. Have a good week.